Despite U.S. tariffs and uncertainty around the future of CUSMA, Canadian automotive supplier Magna International delivered a solid beat in Q4 and introduced stronger than expected guidance for 2026. The stock was up 26% over the past 6 months. Today, it's up more than 18%. Will it see further upside? Let's find out with Jonathan Goldman, analyst at Scotia Capital. It's good to have you join us. Thanks for your time.
Thanks for having me.
So I'm wondering what stood out to you in the latest quarter, first of all. Let's just go through some of the results.
Yeah, really strong results out of Magna, I think, on EBIT. It was a 10% beat. And really what drove that, and actually what's been carrying the performance all year, is the company's ability to control what it can control. So I think in your opening, you alluded to the tariffs and the challenging operating environment. Part of that is vehicle prices going up. So you don't really have any control on how many units you're going to produce. But what you can do is you can look at costs or operational excellence, managing workflow, optimization, procurement, and really controlling your side of the ledger on that regard. And they've done a fantastic job on doing that and driving margin expansion when normally you would need vehicle volumes to increase to do that. And they've still managed to do it every year, and they're still going to do it going forward. And it seems to be a core part of the strategy now. So pretty optimistic about next year and likely good visibility in them achieving those targets.
But what's interesting is Magna's 2026 guidance excludes the impact of tariffs or uncertainty over CUSMA renewal. We've got that renegotiation coming up in the summer. How realistic is that outlook to exclude those things?
It's a good question. There was some impact of tariffs last year. So I think they talked about a 10 basis point headwind on margins from tariffs. I mean, some of them they had to absorb. Some of them you did have commercial recoveries from customers, which is built into contracts. It's a very fluid environment, as you know. Things could change at any second, depending on what comes out on the social media cycle. It's tough to put in a model that for a company or for anyone on what the impact could be. They do have pretty robust mechanisms to recover price from their customers. And what I would say on the renewal of the CUSMA, it is a risk to the story, and I would say the industry generally, but it's in everyone's benefit to work together. As you know and your viewers know, it's a very integrated supply chain with things going back and forth across the border 6 and 7 times, also with Mexico as well. So maybe it gets reworked a bit. I've heard it's focused a lot on assembly rather than production, which would kind of exclude Magna. But it seems to me that everyone is kind of to their benefit to come to a solution that works with everybody, so no one actually has to pay higher for cars.
Yeah, it's hard to kind of untangle yourself from a supply chain that's so intertwined, as you mentioned, right? Is that why you've maintained a sector perform rating on the stock? Like, what's holding you back from being a little more bullish on Magna?
Yeah, I guess I would take a step back and I would say I'm a little less bullish on the sector versus Magna specifically. I would say Magna this quarter, and I mean, I guess throughout 2025 has delivered and exceeded my expectations and the street expectations, and clearly again today. And it's nice to see the market rewarding them. My view on the sector is the input costs to make cars. I mean, we saw the announcement this morning on Trump potentially rolling back steel and aluminum tariffs. But labor has increased, other input costs have increased, freight has increased. There is some level of tariffs right now that are being baked into the cost of manufacturing a car. You could only absorb so much of that if you're a manufacturer, if you're a supplier, because the margins are very thin, as you know. Some of those costs will eventually get passed on to the consumer, I believe. And it's one of the most expensive items you can buy, maybe outside of a home. Any increase in the price has a negative impact on demand. So that's always the risk we're running right now. If you see some more inflation, if the prices go up, you could see a negative impact on demand. And I guess just for context, I think the average price of a car right now in the US has crossed $50,000 US, and the average monthly payment is US $800. So that's quite a bit of chunk of change for the average household.
Yeah, and as you say, like, it's so hard for businesses. We've seen so many Canadian businesses, at least, and probably American as well, trying to absorb the cost of these tariffs for the consumer. So you're not passing that along, as you say, but they can only do that for so long. Is that right?
Exactly. I mean, if you look at the OEM margins, they've come up a lot in the past year. I think we're back or even below the 2019 levels. And that does come at the expense of other things in the supply chain. So between the consumer, the suppliers, the OEMs, even miners, throughout that supply chain, the higher costs by tariff need to be borne by someone. Thus far, it's been mostly the OEMs. The risk then is if they pass it on to the consumers and suppliers to bear in some of those costs.
We know the Prime Minister, Mark Carney, laid out a new strategy last week when it comes to the kind of auto industry, very much focused around electric vehicles, also a potential decoupling from the U.S. There was a couple of things mentioned in his announcement last week, but I'm wondering how much of that affects Magna in particular, do you think?
It would probably affect the entire industry. I guess if we take a step back, I think the bigger question, rather than where the manufacturing is coming from or where the vehicles are coming from, is the outlook for EVs generally. So you've seen some pretty, big announcements from OEMs recently about taking write-downs and reshifting some of their focus to ICE vehicles, the traditional ICE-powered cars. I think that's the bigger question the industry is facing right now. We've seen the adoption curve kind of slow. Obviously, EVs are more expensive, and we talked earlier about these price and affordability challenges. I think before we even get into manufacturing and sourcing and geography and tariffs and those types of conversations, I think the industry really needs to recalibrate the level of EV penetration that we're going to see going forward. So I think there's a bit of a shift that's still happening right there. Maybe it comes down further. Maybe we've stabilized. But I think that's the main challenge the industry is facing, rather than where the vehicles are coming from at this point.
And just very, very quickly, where does Magna sit in comparison with its competitors? Because I know you said the whole sector is going through this, but where does Magna sit in comparison?
Magna is the leading NA North American supplier. They're the largest tier one North America, I believe, number 4 in the world. So these guys are at the forefront of anything. Mm-hmm. They are effectively the industry bellwether as far as the supplier goes. Obviously, you have your D3, your Ford, your GM, and your Stellantis. Magna is effectively that big in terms of the supply chain and supplier base, the tier one. So they really do set the tone for the industry. Everyone looks for them on guidance, outlook, and kind of having their ear on the ground of what's coming next.
Very interesting. Okay, we'll have to leave it there, but appreciate your time. Thanks for joining us.
Pleasure.
That was Jonathan Goldman, analyst at Scotia Capital.